Good morning, team. Happy Saturday. It is the it's the 18th, 18th of March. This is the Members Weekend video. I'm going to go over the market really quick, and then I'm going to go through the watch list of stocks that I have for the weekend. Well, the ones that I use daily, but the ones that came up for Friday ending market close. So we'll go through those. There's about five watch lists that are kind of like my go-tos. Some overlap, so that'll be great whenever you see the same stock in different watch lists. That's a little bit more of a stronger kind of conviction that that it's kind of doing what it's supposed to be doing, because my watch list, they scan for, they have to have great trend quality. They have to have an average true range of at least 1.5 points per move per day. Okay, so I have to put it on pause there. Something came in. So basically, going through the market, going through the watch list. My watch list scans for trending stocks that are stacked nicely here, like you see here, and we're looking for a pullback to a 21 and on a squeeze, or stocks that are setting up on a cup with a handle with a nice little break, and so forth. So we're going to go through those quickly, all of them, and then I'm going to send you that watch list in the email. Basically, the market. The good news is we're kind of slowing down the downtrend. We went from the red to the yellow, so basically the momentum to the downside is slowing down a little bit, which is a good thing. But if you notice, we're kind of coming back to prior support levels that once we broke it, now become resistance. The 21, it's right there, so we're below the 21. We got a spaghetti scenario here. We were nice, when we're nice stacked here, we have a nice trend. When we start breaking those trends and lines start crossing over, that's when we get chop and downward movement. So we are definitely out of the woods. We have the Fed meeting coming in on Wednesday, so that's going to throw the market in a fitsy. Hopefully, it's going to be something positive. The market's going to see it as positive, and we're going to go higher. There's still levels of resistance that I'm looking at here. So obviously the 21, it has a level that has to be cleared, which is that 39, 80 level ish, around there. And then we have these guys over here around that 4,000 level, that kind of coincides with that 4,000 level. So we have that to work with. Then we have these levels over here that we kind of couldn't clear from back here, which coincides with this resistance level. That's that 40. I would say, that 40, 50 level. So if you notice, these levels are those round numbers I keep talking about. So the 4,000, well, the first one we need to clear is the 3980. We need to get above 3980. Then we got 4,000, then we got 4050, then we got up here at 4086. So we have levels that we need to get through to get back to where we were back here, which is still, not great, but at least we've kind of back to the uptrending high of that 4,200 we hit, that we just picked for that one day, and then it's been downwards ever since. So not looking great, especially with the then we have different levels that kind of are longer term levels. So not looking great. We're kind of hoping that the market digest the Fed meeting, whatever they're going to come up with as far as the interest rate, in a positive manner. It doesn't matter what they say, it's how the market reacts to what they say. That's an essence of the matter. We're basically right now, let me show you real quick the 30-minute chart on the S&P. We're basically right at the middle. We're right at the middle. We hit the 3 ATR here on Thursday at around 1 o'clock, and then from there, we've been down ever since. We were at the lower 2 ATR on Wednesday, around 12:30, and then from there we took off to the 3 ATR, and then we touched the 2 ATR down here, just like we did over here, and then we went all the way up. So maybe, hopefully, we have this scenario where we touched it here, and then from there we took off. we are going up, so can we see 39.70? Because this is going to be a level of resistance right here. We're going to have a level of resistance right here at this level. It coincides with the fib extension, and I have the resistance dots right here. So I'm thinking 39.65, 39.60, 39.70. Anywhere between 39.60 and 39.75, it's going to be an area that's also going to coincide with the 3 ATR that we might get to. If we get to that point, that'd be great, because I have a lot of positions that will be helpful with that. The next area we need to clear, like right off the bat, is that 39.31. So we are at 39.16. So I would say another 15-20 points. That's doable on Monday. So we might kind of go up a little bit here and test that, come back, and then hopefully get up there. That's the 30-minute that I kind of base my oversold, overbought extremes levels when I start selling XSPs. And if you notice, every time it hits, not every time, but like we have, like here, we kind of cleared it completely. We went back to the 1, and then we shut down again, and then from here we kind of went up again. So this is the hourly. On the hourly, we have very, very strong, like here, I will show you in the 30-minute. We have very strong resistance up here, very strong. If you notice, on Friday, we touched it, the 2 ATR, the 39.72 range, and we just came back down again, and we're consolidating. This is a 21.50 crossover. When it's green, that means that 21 has crossed over positively from the 50 when it's green. So it was green back here, and then here we crossed down. The 21 crossed below the 50. All this mess right here, we're below the 50, and then here the 21 crossed it again up to the upside. So that's a positive. That's positive. So we need to clear this little channel right here, which coincides with this little cup right here. Maybe building a little handle, and then we need to clear 39.37. Again, another 15, 20, 30 points, and then another 40 points to get to 32. This is the hourly chart. I don't know. It's definitely possible. If you notice in the hourly, we clear the three level here. We crossed over, and then we went all the way back down to the lower 3 ATR. We went to the middle, and then we just sold off really hard. And then we stabilized here a little bit. We went up to the 1 ATR again. Just to remind you, this is the 21. This is the middle. 1 ATR, 2 ATR, 3 ATR. Negative. 1 ATR, 2 ATR, 3 ATR. So we went to the 2, which coincides with this, and we know we're back. I mean, we're right smack in the middle. We cannot be more neutral right now. I mean, we're right at the center. Okay? So we could shoot up, we could shoot down. That's basically where we're at right now. So that's why I'm not selling premium on the XSP, because I don't have an edge. I don't have any extreme levels. On the implied volatility, we're definitely high. If you notice, whenever we hit a peak here, it doesn't call for a bottom, but it kind of gives you a bottom-ish. If you notice here also, we hit this right here, we go up. We hit this right here, we go up. When we hit the bottom, part of this, notice we go down. So we're in the middle. We're in the middle. So for us to have this here, we need to go down. For us to have this here, we need to go up. So we shall see. And then once we have these inflection points, then I can start making decisions on what we're going to do, based on probabilities and having an edge. I don't have an edge right now. We're right smack in the middle. So we just basically need to see what happens on Monday. We might have another little down day at the beginning of Monday, because usually Monday coincides with Friday. and then maybe at the end, the middle of the day on Monday, noonish, 1 o'clock, 3 o'clock, we get a little rally into turnaround Tuesday, and then we'll see what happens Wednesday with the Fed meeting. It's going to be definitely volatility. Expect this on Monday. I'm sorry, on Wednesday. All right, so that's the market. So let me go. I'm going to show you what I have here. So just so you know, this is my watch list. Okay, so this is my watch list of a big 3 bullish buy signal. Okay, so that's a 3 time frame buy signal. Then I have my main squeeze one. Okay, my main squeeze scan, which is, it tells me, you know, what stocks are in a squeeze and how many days they're in a squeeze on the daily. I also have the hourly and the 30-minute just to have some confirmation if they're trending or not. Then I have my watch list of stocks that are within 1% of the 21 moving average that are also trending. You know, obviously, if you notice, you know, they're all going to be good looking charts. I mean, I don't look at bad looking charts. There's no reason for me to look at bad looking charts. So these are all going to be, but they happen to be at this time within 1% of the 21. So it kind of gives me, kind of chooses for me and spits out like the perfect like buy entry sweet spot. And then I have this signal, this watch list that gives me buy signals on another scanner that I run. So we go through that, and then the filtered watch list. It's kind of like my ultimate overall from a global best stocks from my global scans of, like, you know, positive earnings and just a good stocks. And then these are all like ones that are trending, that I have, you know, that are set up very nicely, and then we'll go through that. So let's go through that list real quick, and then we'll make an alert, we'll make an assessments, and then we have an inventory to work with for the next you know, week or so. You know, just looking at this, I kind of like this one. We'll go through all these one by one, and then I'm gonna have another little, definitely a buyer. If he comes back a little bit, just to be a little more frugal here. If he comes back in even closer to a 21, because then my stop will be half of my stop will be 38.15, and then the other half will be below this little arrow here. But I have buy signals, fresh buy signals in the daily, you know, and then we've been in buy signals for a while. Just a nice little once we broke out of this this little base right here, this little nice little channel right here, boom, we haven't seen a downtrend then, and then kind of like the market's kind of push it down a bit. This is a nice little sweet spot entry. I like this stock. I like this right here. I like this setup. It's got a squeeze. If you notice, it's got a squeeze right here. 1, 2, 3, 4, 5, 6 day squeeze. When this breaks, this might go. It's got an ATR 1.9. Usually it has a 3 to a 4. Well, I don't have a yellow, so scratch this one. It's basically right here. It's gonna give me a 4, so almost, you know, almost 2 to 1. So I like this one. There you go. So let's go through them in a more. Again, they're gonna overlap some of them, which is good. So if we see already, you know, once we see them, you know, already talked about, then we just skip right through it. So let's go through it. All right, on the squeeze ones. Ooh, coming from negative to positive, it's got a nice little Dow dividend coming in. That's not bad. I might just buy it for the dividend, but a little bit choppy. Well, that's what kind of what the squeeze is. I don't know if I want to be a buyer at the 21, because it's kind of like the 34 is kind of lending itself to it. If you notice, you know, gives a nice little support every single time. So maybe, you know, this right here, it's a big ticket item. So you might want to, you know, obviously your position size accordingly to now, just so you guys know, position size. Let's say you have a 30 grand account and you want to risk at most 2% of your account. That's $600 per trade. So you back into your positions based on your stop loss. All right. So I personally, I do 0.5% of my account risk. So, but let's say for example purposes, let's say you want to risk, your total risk is it's $300. So you don't want to risk more than $300 on a particular trade because you're looking 2 to 1, 3 to 1. So you're looking to make $600 to $900 while risking 3. That's your strategy. Perfect. Okay, whatever that number is for you, the math is the same. So let's say you want to risk $300. So where is your stop right here? So let's here. Let's say you buy it here. Let's say you buy a 480. Okay, let's say you pick up 480 is your. I'm gonna put an alert here. Let's say we have an entry of 480 because we like the pullback here. And then where's that stop? Your stop will have to be right here to 463. That's too low. So I would say, just kind of like right there, like 468. So we got a 480 to 468. 480, 468. That's 12 points. All right. So 12 points divided by 500. So sorry, 500 divided by 12. That's 41 shares. So you could buy 41 shares at 480 because if you get stopped out, you're a $500 risk level. Okay, that's kind of how that works. Let's do it like this one. This is a good example because this is one that might come into play really early on Monday or Tuesday. So let's say I buy here at 39.10 and I want to risk $500. Where's my stop? Your stop will probably have to be somewhere around here because this little wick here kind of came in play. You might want to have a stop right here, let's say at 30. Well, I mean, this is going to be support. So this stock can go all the way down here and kind of like give it support here. So I don't want to have a 4-point stop on a $39 stock. So if I'm a buyer right here, I'm going to get out. I would say I'm going to get out somewhere right here because this little wicks right here and then below this close. So I'm going to say 38.88. So 38.78. So if I buy it at 39.10 and my stop is 37.78, that's $1.32. $1.32, and I want to risk $500. $500 divided by $1.32. That means I could buy 378 shares. So I usually like to round it. You can round it up, you can write it down, maybe 375, 350, 400. So me personally, say I would buy like, if I have a lot of positions already, I would buy like 350, 300 shares. If I'm just starting to build up my portfolio again, I'm gonna buy 400 shares. So I will buy 400 shares here, knowing that. Let me see. So let me do my potential target. So this can go back to, let's say, 42, 43. So let's say 43. So if I buy at 39.10 and I'm selling it at, let's say, 43.10, that's 4 points. So I'm risking $1.32 to make 4. That's not bad. That's 1.5 to 4. That's that 1 to 3 ratio we keep talking about. So there it is. So in this case, you buy 400 shares, you're risking $500 to make $1,500. That's just the basic math of it. Okay. So when you buy shares, you don't just arbitrarily buy 50, 100. Put the work in. You have to figure out what your risk tolerance is because you have per trade. If you want to risk certain percentage, if you want to risk only 1% of your account, you have a larger account. If you have a really small account, I would go 2%. I would never, ever risk more than 2% per trade. So whatever your account size is, 2% per trade is the max. Okay? Because that gives you 10 losing trades in a row, and you still have capital left over to be able to keep on trading, which is very hard to lose 10 in a row. Okay? If you have a viable trading strategy like the squeeze or other things that I teach and I trade, if you have a viable strategy that you even if you're 50-50 and you're making 3 to 1 on half of your trades and you're losing 1 on half of your trades, you're profitable. You're profitable. So it's simple. Trading is very simple. So do the math. Put the work in, guys. Do the math. Don't just buy shares to buy shares. Okay? Take the extra 30 seconds to figure out where your stop loss is. I'm getting out at this point no matter what. I'm definitely getting out at this point at 30 37.78. Okay, at 37.78, I'm getting out. I'm getting in at 39.10. I want to risk at the most $500. In this particular example, I want to risk $500. Okay, so if I'm risking $500, this is how many shares I buy. 375, 400 shares, around there. Let's say you only want to risk $200. Let's say you want to risk $150. That's all you want to risk, $150. So you want to make $450 and you want to risk $150. So that's the same thing. So 150 divided by 1.32, you can only buy 115 shares around there. So you buy 100 shares, 125 shares in this particular case. So you know that at most you're going to lose is $150 because that is your position size according to your trading plan. So whatever that number is for you, that 1%, I trade at 0.5%, I have a larger account. So I even go sometimes as 1/4% of my total buying power. So I'm risking anywhere between $500 to $700 a transaction. That's about 1/2 to 1/4%. Okay. So if you have a smaller account, your max is 2%. So let's say you have a 20% account, a 20 grand account. So you're risking $400 per trade. That's your max. I wouldn't do that. I would probably do about $250, $300. If you have a 10 grand account, your max is, $200. That's kind of fair. Let's say you have, let's say, a 10 grand account. Just do the math. Max is 2%. Okay. Just if you follow that rule, I guarantee you will be in this game for a long time. If you're max 100%, no questions asked, 2% max, you're gonna be in this game a long time because you're limiting your risk, to your account size basically. So as your account grows, that 2% is still 2%, but then you're risking more. I mean, obviously, if you risk more, you make more. So if you're risking $500 a year, you're gonna make $1,500. If you're risking $150, you're gonna make $450. The math is the math. Okay. So I'm digressing in the same thing, but I want to get that point across so you guys don't lose money. Okay. Have a strategy. Know where your stop loss is. Know where your target is. I'm based on your stop loss. I'm based on your risk trading plan based on your portfolio size. That's how many shares you buy. You back into your position size based on your risk tolerance, based on your trading plan. Have a trading plan, and trade your plan. Trade your plan. Okay. So that's how I would trade this one. Me personally, I would probably buy 400 shares here. Risk my $500 to make $1,500 potentially, or somewhere along the line. Obviously, this keeps going higher to like the low 40s, 42, 41 around there. I'm definitely raising my stop, and then along the way, I'm reducing that $400 risk. I'm cutting it in half. So my first target will be somewhere around 43. My second target will be somewhere around 44.5, 45, around there. And as I'm taking this one, I'm cutting my risk in half. So if I take profits at 43.10, let's say my first target, now that $400 total risk became 250. So I'm cutting it in half. So at this particular point, I cannot lose on this trade. This trade is a 100% guaranteed winner if I'm taking my first profit because I'm racing halfway my risk on the lower side of my remaining shares, but I already booked profits here. So even if it goes back down and stops me out, I made money on this half and I'm good to go. It's a profitable trade. That's how I trade. You have to have a game plan. You can't just like blindly just buy stock because it looks moving. Let me just buy. You got to put the work in. You got to put the mental capital, effort into it to be able to sustain a trading career where you make a living doing this, which is you could definitely make a living trading. I guarantee you can make a living trading if you have a trading plan that works and you follow and you adhere to the rules. And obviously you have to have enough capital. You have to back into how much your living expenses are. Based on that, you kind of back into your percentage return. Let's say you're averaging anywhere between 30 and 60% return. Let's say 30% return on cash, 60% return on 30% return on your margin buying power, which is 30% of your cash. So based on that, you back into what your living expenses should be. Let's say you want to make 10 grand a year, 10 grand a month. Well, you need about, a couple $100 grand in your account because if you're making 30%, 40% return a year, you back into how much that will be and so forth. It's all math. It's basically all math. So, but it does work. You can make a living doing this. I have been, and basically just because you adhere to the rules, you have a plan, you trade your plan, and you let the math dictate what you do. Your stop losses, your position size, your number of positions, your buying capital, make sure you have enough, and so forth. I'm digressing a lot here, but this is a very good point. This is a very strong point. I need you guys to understand. You didn't just buy blindly. You didn't just go buy because, 100 shares, I'm gonna buy 100 shares, 50 shares, whatever, 25 shares, 150. No, you back into the number based on your risk tolerance and based on your stop loss. How many shares based on your portfolio size. Okay, I'm gonna stop being a dead horse. So let's go through it. We went through this one. Okay, we know what we're gonna do here. FSLR. This is like all over the place. I'm not doing it. Well, no, sorry. Oh, I guess it was somewhere around here in the little box, guys. Look at that. See? Top of the box, right? Look at the top of the box. We drew it back here. This is back on September. I touched on this, okay? Look at the top of the box. Look what happened here. We had the red arrows resistance here. When we got by the box, what happens here? Woof. And then even halfway through the box, you could have got an early entry right here. So try your boxes, guys. This thing works. Okay, so we're back over here. I'm not trying to make this video too long here, but okay, this is a nice little move right here. This breakout. Okay, it's kind of coming back in it again. If you know, well, there it is. That's the squeeze. What did you know? What did you know the squeeze works? There's a squeeze, right? There's a squeeze. You get the breakout. Boom. When you get the blue momentum, you know it starts slowing down. Once you break below the 8, you get out. So let's say you got in somewhere around here. Let's say you got in somewhere around here, 88. You get out of almost 200. That's a nice little 12-point move on a week and a half or so. So this is a little bit extended. It's kind of like it's doing its thing, but I wouldn't want to touch this right now. First Solar Energy. I'm gonna pass on this. Okay, this one setting up nicely. Nice little breakout here. Again, the squeeze. Guys, if you own me for the rest of your life, just straight the squeeze, you are going to be very wealthy. Look at this. Look at this. Look at this squeeze right here. Boom. Boom. Right? You get in somewhere around here between the sweet spot, right? Or you wait for the breakout. Let's say you buy here at the breakout, 207. You get out at 215. You make 7 points in less than a week. Couple hundred shares, that's $1,400 in a week. And just rinse, wash, repeat. Rinse, wash, repeat. Rinse, wash, repeat. You do the same thing. You find these things, you see the base, you get the breakout, and you get out when it comes back inside the 8. Or when you get the first green momentum, you start taking profits, and then you reduce exposure. So you definitely we're taking profits somewhere around here at 220. When I saw that first blue bar, the first darker, in other words, momentum is slowing down right here, I'm taking profits right here. So 221. Guys, I mean, this is just like easy money. Not easy, you know what I mean. It's simple, very simple. Not easy, it's very hard, but it's simple. Just follow the rules. I got a squeeze right here. Look at this. Right here, right? The beginning of the squeeze, the end of the squeeze. So I got a little mini squeeze right here. This coincides right here. It's coincides right here. Little mini squeeze right here. So there's a little breakout right here. You have resistance. I definitely would not have taken that here on this level because I see resistance here. But I'm seeing here, look, I'm getting the early warning signal. See the green dots? It's telling me, hey, I'm about to fire. If you want to get in now. This is what the indicator does. Look at this. The little green dots is telling me I'm about to fire. Get in now. You get in somewhere here and boom, takes off. I'm about to fire. Get in now. Above the resistance, I would have gotten in right here. Let's say 185. And this sucker took me all the way. Let's say I would have gotten stopped out right here at 195. That would have a 10-point move. I probably would have taken profit somewhere here when I saw this little wick right here. But either way, let's say, once it crosses the 8, I'm back out. Guys, I mean, this is just, wow, okay. Back over here. I'm very passionate about this, as you can tell. I'm a buyer right here. I'm a buyer at 210. So I'm going to put alert here. Again, I'm going to digress. I'm a buyer at 210. I don't have a squeeze, okay? But I'm kind of letting it set up a little bit. I'm going to let it set up. Because if you notice here, I'm going in a little channel right here. If this little channel consists, we're going to get a little squeeze setting up here. Like here, we had a nice little channel here. Okay, a little choppy action. Choppy action is good. It builds resistance, it coils, and it takes off. So, again, how would I handle this? Well, if I'm a buyer at 210, okay, and I'm a buyer at 210, where's my stop? My stop is definitely 206.78 because I'm stopping below this wick in the 21. Okay, so 210. I'm buying at 210, and my stop is 206.78. That's 3.22. Okay, so 3.22. This is what I do. This is what I do. Simple. I'm showing you exactly what I do. Boom. What's my first target? My first target is somewhere around 230. Okay, 230. So 210 to 230 is 20 points. My stop is 3. That's a 3 to 20. I mean, sorry. 3 to 20. That is a great risk reward. Extremely great risk reward. I will be probably adding. If it breaks above this little channel right here, I'll be adding here. And I'm probably taking profits around the 220 range. So I'm taking 10 points off. I'm taking profits and then racing the other ones here. So I'll be a risk-free trade. That's how I will handle this up here. So how many shares would I buy? Okay, I'm back to my scenario. I'm risking $500. So if I'm risking $500 with a 3.22 stop, I'm buying 155 shares. So I'll buy 150 shares. I'll buy 150 shares here. So if it goes back down again, I'm losing $500. If it goes up 10 points, I'm taking those $500 sorry, I'm taking that profit here on half my position, maybe 50 shares. I'll leave 100. I take 50 here. I'm raising my stop here, so now I have a guaranteed winning trade. That's how we'll handle this. All right, I digress. We made some good money on this one. We made some really good money on SCC. We bought it somewhere in the 87 range. We sold it right here somewhere in the 93, 94 range. That's a great trade. So we're back at it again. This sucker is still in a squeeze. Still in a squeeze. So I'm a buyer back at 88. I'm letting it come back down to me. I'm not chasing this. I would definitely be a buyer back again on this guy. Let's say on this one I want to raise $350. Okay, my stop will be 86.46. 86.46. I'm buying it at 88.35. I'm risking 189. 350 divided by 1.89. I'm buying 185 shares. So I would be a buyer here of 185 shares. Okay, if this comes in, I'm going to do it right here. I am definitely doing this. So edit. I will be a buyer at 88.30, and I'm going to buy 185 shares. So if sometime in the week it gets to 88.30, I'm going to get filled on those 185 shares. Where's my stop? My stop is going to be right here, 88.46. And where's my first target? My first target is going to be somewhere in that 92, 93 range, around there. That's kind of how we handle this. Let me see a little bit of it further. Yeah, somewhere in the 94, 93 range. This kind of blew through this. If you notice, it kind of went boom, came back down, boom, 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 and then it just took off. So this is not relevant anymore. Okay, so that's how we'll handle this one. All right. DKS, I already had an alert here at 140. If it comes back inside in this area, I'm definitely a buyer. They had dividends, dollar coming in here. Next one, Aeon. Yeah, somewhere around here. Again, guys, this is a long ass squeeze right here. If you notice, the squeeze started right here, and it fired, or it kind of wanted to fire here, and then it really fired here. So you would have been in this trade for a long time. I wouldn't have taken this one because you got spaghetti. Okay, you gotta even within the squeeze, you gotta fine tune your criteria. I got spaghetti. I don't like spaghetti. So I definitely would not have taken this trade here. But now so if you notice here, from this point on, this little box right here, we have a nice channel here. So when would I have been a buyer? I have a green dot. I definitely would have been a buyer somewhere maybe in this day here or in this day here. Why? Because I have momentum is increasing. I have a squeeze. I have a low hit here in the 50. I'm shooting up. So let's say I'm a buyer right here at 77. Okay, at 77, I'm definitely a buyer. What would I gotten out? At 90. I would take some profits up here at 92. But let's say at 90, 77 to 90, do the math. Okay, this stuff works. This stuff works. Okay, this one. I think I'm taking a little bit too long on the video. Sorry guys, but I'm a little passionate about this and I want to make sure I get my point across. All right, I'm a buyer here. Let's keep going. And we go. ELF, an old favorite of ours. Look at this. Look at this. Look at this move. Poof. Setting up here. Once it breaks it takes off. Nice. Little bit of trouble here. I have red momentum bars. Okay. These are red. This is a squeeze that is looking to be squeezed into the downside. So I am not touching this right here, right now. Okay. And I have red bars, so this could fire to the downside. It can go up to the top side. I'm gonna do a little here, just kind of like keep an eye on this old favorite of ours. But this looks like it's gonna fire to the downside, or at least just go somewhere, go nowhere anytime soon. All right, this is one we'll beat the dead horse on. I like this trade. I really like this trade. I like it so much. I am going to do the same thing here. 39.27. You know what? If somehow we get to 39 on Monday, I'm going to be a buyer here. How many shares am I going to buy? Okay, let's do the math. I think we did this, right? I forgot how many shares I was going to buy on this. Wasn't it 400? Yeah, I think let's say 350. So I'm going to buy 350 shares. I'm going to buy at 39. Good to cancel. Okay, there it is. Boom. Okay, so if it goes to 39, I'm buying it. Where's my stop? My stop is somewhere around here. We talked about this. I went through the math on this already, and I'm gonna start taking profits and so forth. So I like this trade. We got a nice little squeeze forming here. I like it. If it doesn't work out, hey, it doesn't work out. Again, we had the Fed, so it's gonna be a little bit premature getting longs, but Monday and Tuesday, if this happens and we get a little pop, Tuesday afternoon, it's patient, we got a point or two, I'm taking profit. So this is gonna be a 1 to 2 day trade here because I don't want to go into Wednesday too exposed. But if I could buy this stock based on the way I see this chart here at 39 on Monday, I'm a buyer because I'm risking my allotted amount, and if it kind of stays within that, even intraday, I've got a 1 or 2 point movement on this. This thing moves in a day about 2 points, 1.9. Okay, and then if it fires, it's gonna fire about 4 points. So there's my 2 to 1. So if I got a 1 or 2 point movement on this, if I have to, that's $700. If I make 2 points in this just in a day, I'm gonna take it. So again, I digress. Let's keep going. This is gonna be a long video. I want it to be a half an hour video. It's gonna be an hour video. Okay, the next one. Yeah, this is like just too choppy, too up and down. I got too many. I don't like the way it looks. You want charts that go from lower left to upper right on the screen. Okay, that's it. This is kind of like channel. Don't like it. Let's move on. Okay, next. That was the big three sign, big bullish. Let's go through another quickly. They're within 1%. They're within 1%. This one is kind of like not doing anything for a long time. See, it's kind of like just chopping around. I'm not gonna waste my time with this. CLH, it's kind of just creeping up, and it's kind of like hanging around. Kind of nice little squeeze here. I don't know. I like that other one better, that INTA better. So I'm gonna pass on this. But I am gonna give myself a little alert here, somewhere right here, like that. I know that it's kind of like, you know, hey, it's breaking out. You know, take a look at me, because then, you know, if this breaks out here, it might be a buyer and just kind of put a stop right underneath that. And this one here, yeah, a little choppy. Not interested. This one, DRV, nah, not interested. FMV, nah, not interested. TLH, nah. So let's go through that. I went through this. Let's go through this. This is the INTA. We did this one already. This is overlapping, which is good. We saw this one already. We saw this one already. We saw this one already. So these scans overlap, which is good. It means we have confirmation of the same stocks. Yeah, I don't want to do anything with this. Nah. 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 I'm looking for a particular pattern. I don't like this. Woof, I'm not touching that. Not touching that. It was good back here. It was good back here. You know, get this verb breakout, boom, the squeeze, awesome. Now just going, you know, it's going in this little box right here. Here's our box, right? Here's our box. So I am waiting for this to break out of this box here. So above 84, I'm not touching this. It's got a squeeze going, but it's kind of like just going back and forth. It's just too choppy, too volatile right now, the way it's looking. Let's keep going. Yeah, don't like it. Too long of a squeeze. This is too choppy. Nah. 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 This is what I do every day, guys. Every day I go through this and I got my scenarios, and that's the work. ELF, we talked about this already, and then the last one here. Nah. So now I'm gonna go through the final list, which is the filter watch list. So again, awesome. So if you notice, the ones that look good, I mean the ones that really look good, are coming up in various scans, which is, it just kind of confirms, okay, I'm filtering down from like, you know, 1,000 total global like good stocks to down to like, you know, 300 that kind of in the criteria. From 300, I'm bringing it down to my watch list of maybe like 30 to 50, and then from those, the ones that overlap are the other ones that look really good. Maybe 3 or 4, 5 or 6. I don't know. So far, we kind of like, I've seen like 2 or 3 that are really good. This one, INTA, LLCC, this one, IDCC, is kind of going sideways. So like, again, like, even if you just get 1 or 2, you know, that's fine. I don't like this. It's kind of like, it came back too hard, too fast. This one I like long time squeeze here. Here's my box. Okay, here's my box. I actually probably make the box. Let me just delete the box. Make it a little nicer box. Okay, somewhere around here. Right? Kind of captures the outliers here. So anything above here, you kind of breaking out, right? If you notice anything above there, you're kind of breaking out. So that's a good sign. So anything in the bottom of the box, if you notice, it's kind of like, you know, resistance support here. Anything in the bottom of the box, you know, it's a good entry. So I'm gonna put an alert here, just in case for some reason on Monday or Tuesday or Wednesday we get a pop down here for boom, and then kind of like this one over here, where we have a nice little pop right here, and then it kind of came up again. You can steal it. You can steal it right here at 43 something. Ooh, this is a good one. So I like this. I like this squeeze. Okay, the first day of the squeeze was right here. So they said you would have picked it up on the 3rd day or the 5th day right here. So you would have picked it up somewhere around here. at 43, which is where I want to pick it up now. So you can notice here, look at it. This works so perfectly. I got to squeeze right. I got a 1, 2. I need a minimum 3. Ideally 5, but let's say a minimum 3. So that third day right here, that would have been a perfect buy, sweet spot. Below the 8, above the 21, you buy it right here at 43. What do I want to buy it now, guys? What I want to buy it now at somewhere around here, around 43. That's why I want to buy it now. Okay, that's what I would have had it here, and I would have kind of like probably 43 to 47. I definitely would have taken some profits up here already, so I would have been up on this stock already. So now I got momentum building up. I got light blue bars. This is about to take off. This might not give me a chance to come back inside here. So I'm gonna put another alert right here at 45 as well, because it's a sweet spot right here, entry. I buy right here at 40, 44 and change. So put an alert right there. So might pick up some here as well. All right, and then if this takes off, where can this possibly go? This could possibly, get up here to like the 48.5, somewhere around here. So if I'm a buyer here at 44, and it goes to 48, that's 4-point moves. Where's my stop? My stop is gonna be right here at 43, 48. Okay. So again, I'm risking. Let's say I want to risk $250. Okay. 44.16. Let's say I buy 44.15, and then my stop is 43.38. I'm risking 77 cents. So 250 divided by 0.77. I could buy 325 shares. So I could buy 325 shares right here at 44.15. So I'm going to do that. 325 shares. That's how I said. 325. Okay. So if I buy that, I'm definitely selling some at 47. So if I'm buying it at 44 at 3 points, I'm probably getting rid of like 50 shares here, and then start slowly raising my stop. And then at 48.50, I'm definitely taking some more shares out, another 100 shares. So now I'm 100% winning this trade, and then I'm raising my stop to break even, or at least cutting in half, and so forth. I'll manage it accordingly. So basically, that's how I will handle this. And then if I buy it here, if it goes back down again and it hits me that 42, I'll be a buyer here at the bottom of this box, and then I'll probably risk less because it's a bigger stop here. Buy it at 42, and then my stop will be below here if it goes back inside. But this looks like it wants to fire. Okay, so if I have a chance to buy it here, I'd be lucky because I don't think it's going to come back in. If it does, great. If it keeps going lower and it stops me out, great. That's trading. It's not called winning; it's called trading. So even if I'm 50-50 and I keep my 3-to-1 ratio, I'm very profitable at the end of the year. Okay, so that's how I'm handling this one. So let's go back over here. Let's keep going. The LCS. This is a nice trade back here. This squeeze was beautiful. Look at this. This is freaking beautiful. Another little squeeze building up here. You got a squeeze building up here. So this is a nice one, but I already have 3 that I've identified that I want to get into. So I'm good with that. So this is not bad. This is a good looking chart. I'm going to put a little alert here just to kind of see. Maybe I'll take a half position of this one if it gives me a chance right here with a stop right here. Again, this is a bigger stop, so I might take a smaller position size. Instead of let's say my 2%. Let's say you have a 2% max. This will be a 1% max, half position. Okay. Nvidia just kicking butt, man. I mean, it's like I love Nvidia. I've had it back in the day last year. There's some good money in that. Just took off. It's taking off. This is already gone. Look at the squeeze. Look at the squeeze. Nvidia was in a squeeze, guys. From right here until it fired right there. So we had a squeeze on Nvidia right there, right? Where was your entry? Either here or especially there when it came back to a 21. That's when it gave you the opportunity. Back on 313. Back on 313, if you were doing your work and you were seeing the squeeze, you would have picked it up right here. Let's say at 230. Let's say at 231. 231. 257 right now. Okay. Why would you have taken it at that point? Because it's in a squeeze. It's more than 3 days, and it gives you the squeeze spot entry below the 8, above the 21. And it never, ever would have stopped you out. Well, maybe it would have stopped you out right here. Maybe. But then you get back in when it closes up. Actually, no, because it didn't close below a 21. It's got to close below 21. See, it never closed below a 21. So it would not have stopped you out. Let me look at this. Yeah, if you notice, it closed above 21. It broke it, but it kind of reverted back in again, and it closed above the 21. So you're a buyer somewhere around here at 230 to 31, and you would have kept it. And you would have kept it because it's in a squeeze. You build up the position. It just fired in this day. That would have been a beautiful trade. I did not take this trade. I missed this trade because I have other positions on right now. So this here, I'm going to put it back over here. All right, let's keep going. CDNS, nice one. This is a very nice one. Look at this. A bit of mini squeeze here. 1, 2, 3, 4, 5, 6 days. Boom, it fired. You have a squeeze right here. This is the pro. This is the pro. This is day 1 of the squeeze. This is day 3. There's your entry. There's your entry right here. Let's say 197. It's at 206. The power of the squeeze. You gotta love it, guys. You gotta love it. All right. Let's go back. I want to put an alert here. If this error gives me a chance to get back in, I will get back in. But this is already gone. This is already fired. I'm not chasing this. This is gone. Okay. This one. Ooh, look at this. Same thing. Squeeze, squeeze. You would have been a buyer somewhere around here. Boom. You would have been a buyer at 137. This thing's at 130. I mean, it's just amazing. Okay, we're back in this one. Okay, this one, little gappy here. This little gap might get filled at some point. It already broke the squeeze here. Yeah, maybe if it comes back inside here, I'm gonna take a look at it. Again, don't be scared of high price stocks. Just position size according to what I showed you earlier. This one, it's kind of going sideways, shorting it. It's squeezing. It's beginning to build up. If you notice, yeah, I've seen better charts. Although it's beginning to start looking good. But here's the box. If you guys get used to drawing boxes, you're gonna see the charts a lot differently. Because you're gonna see it. You're gonna see the pattern. You're gonna be a buyer at the bottom side. You're gonna be a buyer at the breakout. You're not gonna be buying up here because it's on top of the box. You buy at the bottom of the box because your stop is right here, or you buy at the top of the box when it breaks out because your stop is right here. Just that simple, guys. It really is that simple. We talked about this already. Okay, a few more. I don't like the way this looks. Let me take this off already. This already did its thing. AMD, yeah, AMD took off. And look at this. Why did it take off? Because it's in a freaking squeeze. You got a squeeze right here. Look at the box. Let's draw the box. Draw boxes. I love drawing boxes. Here's the box. You're a buyer at the bottom of the box. You're a buyer at the top of the box outside of it. Okay? Here, let's say you would have been a buyer here. You got stopped out right here. It's 86.90. 85, you were lost $1. Okay. Then you go back down here. You know you're in a squeeze. You're in a buyer somewhere around here at the bottom of the box. Or you're a buyer again here at the top of the box when it broke out at 86, 82. And you're at 97. So maybe the first try didn't work. The second one definitely did. Okay. And then where are we here? Squeeze right here. We're going to squeeze right here. We're going to squeeze right here, right? So you're a buyer right there. Sweet spot, right? You're gonna this day, somewhere this day you're a buyer. Okay? Let's say you were a buyer right here, high end, 83 to 97. Okay? The power of the squeeze. All right, 2 more, 3 more. Roadblocks. Again, this just took off. It's nowhere to be. Can't touch this. This is too choppy, too sideways. Don't like this the way it's looking. And the last one. Yeah, this is key. Look, this is giving me green dots. This is telling me, like, see the green dots here? Green dots. I'm ready to go. I'm ready to go. Boom. This is giving me green dots right here. I'm ready to go. I'm ready to go. Momentum is picking up here. So do I adhere, even though it doesn't look too good? Do I adhere to the signal? Tell you what, man, if it breaks this little cup right here, if it breaks this little level, this little channel right here, let's draw the box. Let's draw the box. This is live trading. Let's draw the box. Oh, sorry. Okay, this is my box. This is kind of my box right here, right? I'm capturing the high ends and the little outlier here. So this is the middle of the box. So if this breaks out of here at 150, it has a good potential. But this little cup right here, you got a box within a box, if you notice. Right? If it breaks above this box, you could be a buyer. Because, and again, I know I want to be a buyer up here above this breakout, but I mentioned it before. This little early green dot signals give me letting me know, hey, I'm about to go. Get in because I'm about to go. I'm about to go. And see, this one I'm about to go was going downwards. So with a red dot. So this is I'm firing short. I'm firing short. If you notice, it took off down a little bit. This little, but then I'm seeing momentum picking up to the top side. I'm seeing the yellow bar. I'm not seeing red anymore, and I'm seeing upward movements. If you notice, these are higher highs, right? Green bar, yellow bar. So I am definitely, you know what? I'm a buyer right here, just because I'm getting a signal here, and I got the green dots letting me know. Every single time I see the green dots, it's letting me know. I showed you before. So why not? Why am I going to think it's different this time? So above right here. So 145.08. Okay, how many am I going to buy? Let's do the math. Let's do the math. Okay, I would definitely be a stop out right here. So the 21, the 8, this kind of convergence here. If this breaks this bar's low, that means this is kind of choppy around, and I want to be involved with it. So oh, look at this. Look at this. I got a big 3 buy signal right there. I got a big 3 buy signal. Okay, and I got to reinstate it. So I have a little more conviction now on this trade. So I'm stopping out at 141.16, which is the low of this bar. The low of this bar is 142.44. And how do I know that? Look at this number right here. Look at this number right here. Okay, 140. So the low of Friday was 142.44. The low of Thursday was 139.64. I don't want to go that low, even though it kind of makes sense to kind of give you a little bit of room, because this stock does move 3.5 points a day. But the stop really should be right there. That really should be the stop, 139. So 141.38, 141. Yeah, because it was 142.44. So 141.78. I'm going to give you a little bit more wiggle. 141.78. So 141.78 is my stop. I'm a buyer above this bar with the highest 144.96. So I'm a buyer above this bar as well, 144.79. So I want to see 145.08. 145.08. 145.08. I'm a buyer. Okay, I'm giving it $303.30. Okay, let's say I only want to risk $250 here because it's kind of like a speculative. I want to risk 250. All right. So if I want to risk 250 divided by 330, I only can buy 75 shares. That's what I'm going to buy. I'm going to buy 75 shares. So I said 140. I'm going to buy 75 shares. 145.08. Okay. Stop. I'm going to stop limit because I'm okay all the way up to like let's say 417. So between 408 and 417, I'm okay to buy this. I'm going to buy 75 shares. So if Monday, Tuesday, or Wednesday, anytime next week, again, whenever I put these trades on, by next Friday, if they haven't hit, I take them all off. So I'll give it a week. So if sometime next week this stock goes above this, I'm a buyer, and then automatically when I get the shares bought, I'm coming in, I'm putting a stop at my 141.78. That's it. Now, where's my potential target here? This can go to 150. Okay, I am definitely taking profits at 150. So if I'm buying it at 145, I'm taking my profits, and let's say at 150, 151 around there, I'm taking like 25 shares off. Okay? And then once I take 25 shares off, I'm raising my stop to like right here, 148. So I'll be below the box and below this little extension here. So I have a guaranteed winner in the next 50 shares. And the next 50, I'm going to let it go to like 155, 156 around there, and then take it off and get a nice little trade. So even at 151 from 145, that's 6 points. I'm risking 6 and I'm risking 3.3 to make 6, and change. So there it is. There's my 2-to-1. This kind of, I love it how it works that way. All right. So this is an hour video. Sorry about that. I want it to be a little bit shorter, but I think I'm giving you good information. At least I feel that I gave you good information that's going to help you be a better trader. And I went through all the stocks and what I do and what to look for and so forth in the market. So I hope you guys are well. Study this video. You can make money in the market. Don't let anybody tell you otherwise. You can make money on the market. In the market. You can make money in the market. You can make money in the market. As long as you follow the rules, have a plan, put the work in. Let the math guide you in your transactions, in your stop losses, in your position sizes, in your how much you want to risk. Just global rule, like 100% hardcore, like the Bible. Do not risk more than 2% max on any one trade. That's it. I personally only risk 1/4 to 0.5% of my portfolio size. I have a larger portfolio, so I don't want to risk $3,000, $4,000 on a trade. I'm only going to risk between 700, 500 around there. And this one I'm only risking 250. Okay, because I have a lot of positions already. So again, you fine tune based on what you have. So I'm only taking here maybe 1/4 position on my size, just to kind of like get a nice little pop. If you get 6 points, hey, that's $350, $400. When I'm only risking 150, 170 around there, I take that. Okay, all right. Be good. Study this. Let's make some money on Monday and Tuesday. Take profits on Tuesday afternoon, go into Wednesday as light as you possibly can, because there will be opportunities on Wednesday because the market's going to go crazy with the Fed meeting at 2 o'clock. All right, guys. Have a good one. Be blessed.